Welcome to the weekly look ahead at the markets with ETX Capital. And the main events are the Q4 earnings from Apple and the Bank of England's key monetary policy decision. All eyes are on the Bank of England decision on Thursday, which will be accompanied by fresh economic projections and a press conference with the Governor Mark Carney. Market indicators suggest a roughly 90% chance that the bank will announce a quarter-point hike to interest rates for the first time in a decade. The likelihood that the bank will hike rose last week after third quarter GDP figures beat expectations. But there remains a high degree of jeopardy, with several MPC members publicly questioning the logic of hiking rates at such an uncertain moment for the UK economy, with Brexit on the horizon. On to earnings, and Apple's due to report its fiscal fourth quarter earnings after the close on Thursday. There's the usual sweep of metrics to pay attention to, but iPhone sales has to be the main focus given they account for the largest share of revenue still. And there have been signs of a muted response to the iPhone 8 so far. EPS is expected to rise to around $1.87, but there have been some concerns about the rocky start to iPhone 8 sales, which may be a problem in terms of achieving this guidance. US carriers have indicated lackluster sales thus far, but arguably of more importance is the guidance Apple gives on iPhone X sales for the fiscal first quarter of 2018. Also on tap are third quarter earnings from Facebook and Tesla. And remember, you can now trade a bunch of US stocks, including Apple and Tesla, out of hours, which gives greater flexibility around these earnings releases. And finally, the monthly non-farm payrolls numbers on Friday will be watched as keenly as ever, markets eyeing whether the Fed can hike in December and again in 2018. Treasury yields have been pushing a lot higher amid signs that investors are coming round to the idea that the Fed will tighten more next year. And the key number to consider is average earnings, which is now the better market indicator for inflation expectations. That's all for now, and remember to check your emails or head to the website for a full look at the week's main events.